Welcome to The Explainer, where we break down big topics. So, when you think of the world's biggest investors, who comes to mind, right? You're probably thinking of names like Warren Buffett, maybe some giant tech firms. But what if I told you the real answer is, well, it's something totally different? The biggest investors on the planet, they're actually governments. And we're not talking about a little bit of money here. We're talking about a staggering amount, over $10 trillion. That's the estimated cash managed by this group of pretty little known but hugely powerful players called sovereign wealth funds, or SWFs for short.
Okay, so let's dive into this. We're going to look at what these funds actually are, why countries even need them, how they work day to day, what their new mission is shaping up to be, and the big one, why all of this really matters.
All right, first things first. What in the world are these funds? Okay, at its most basic level, a sovereign wealth fund, or SWF, is just an investment fund that's owned by the government. The easiest way to think about it? It's like a country's ultimate savings and investment account, created to steer all that national wealth toward big, long-term goals that are supposed to help the whole economy. But, why does a country even need one of these? It's a fair question, right? It's not like a government can just go online and open up an E-Trade account. Well, it really boils down to two huge goals, both of them absolutely crucial for a country's well-being. First, you've got short-term stability, and second, long-term savings. So think about it. If you're a country that gets a lot of its money from something like oil, you know those prices go all over the place, right? A fund helps smooth out those crazy ups and downs. And at the same time, it's a way to make sure that when those resources, eventually run out, the wealth doesn't just vanish along with them. So where's all this cash coming from? Well, the most famous source, of course, is natural resources. We're talking oil, diamonds, copper, you name it. But that's not all. These funds can also be fed by things like government budget surpluses, profits from trading with other countries, and in some really interesting cases, even donations from other nations. Now, this is where it gets really interesting. You see, no two of these funds are exactly the same. They're all kind of different, with strategies as unique as the countries that own them. Let's start with the heavyweight champion of the world, Norway. Their fund is the largest on Earth. It's so big, it owns an average of 1.5% of every single publicly traded company on the planet. Just think about that for a second. It was brilliantly set up to take this finite oil money and turn it into a permanent financial inheritance for its people. And here's the clever part. To keep from messing up its own economy, it invests all of that money outside of Norway. Plus, the government has a super strict rule. They can only spend the expected annual return, not touch the original cash. In theory, that means the fund can last forever. Okay, so that's the giant. Now let's jump to the complete opposite end of the spectrum for a totally different approach. Let's talk about the tiny Pacific island nation of Tuvalu. Their fund isn't built on black gold or shiny diamonds. It's mostly funded by grants from countries like Australia and the UK. And what they've done is so smart. Tuvalu's fund has this really clever two-account setup. You've got account A, which holds the main pot of money, the capital, and that's totally protected. Then all the investment income it generates flows into account B, which acts as a kind of buffer. This setup lets the government pull a nice, steady stream of income for its budget, even if the markets are having a bad year. It's just a brilliant model for long-term stability. Okay, so we've seen how they work, but the story doesn't end there. Today, these funds, with all their trillions of dollars, are facing a whole new ballgame. It's a challenge that goes way beyond just chasing profits. And that challenge is called ESG. That stands for Environmental, Social, and Governance Investing. Now look, it gets criticized sometimes, for sure, but this quote here really gets to the heart of it. This isn't about wokery or fluffy stuff. It's about good business. SWFs are being pushed to think about more than just the bottom line. They're thinking about their actual impact on the world. The whole idea is that being sustainable isn't just about feeling good. It's about being smart with your money for the long haul. Now, you hear a lot about the E for environment, climate change, and the G for governance, but that S in the middle for social is becoming a really big deal. This is all about how a company treats people, its workers, its customers, the communities where it sets up shop. And frankly, it's also the hardest part of ESG to really nail down. So what does social actually look like? Well, a lot of these goals line up with the UN's big Sustainable Development Goals. We're talking about everything from gender equality and making sure people have decent jobs to things like good health, reducing inequality, and protecting basic human rights. It's a huge umbrella. And, of course, not every fund focuses on the same thing. It makes sense, right? Funds that are designed to help develop their own country tend to focus on stuff at home, like creating jobs or improving gender equality. On the other hand, the huge global funds like Norway's are more likely to focus on big picture themes like human rights across all of their international investments.
But here's the biggest headache for everyone involved: the data. Seriously, how do you put a number on a company's impact on well-being or inequality? It's not like measuring carbon emissions, which is pretty straightforward. For a lot of these social issues, there just aren't good standard ways to measure them, and that makes it incredibly tough to compare companies and decide where to put your money. Okay, so we've gone through a lot. Why should any of this matter to you? Why care about these giant, almost invisible pots of government money?
Here's the takeaway. Sovereign wealth funds are changing big time. They started out as these quiet, passive savings accounts for nations, basically tools to keep the economy stable. But now, by getting into ESG, they're turning into active, incredibly powerful players on the global stage. They have so much money, they have the power to actually influence how companies all over the world behave.
And all of this leaves us with a really big and frankly fascinating question for the future. As these funds get bigger and more powerful, what is their ultimate purpose? What is the true responsibility that comes with managing a nation's wealth? Is it just to generate more wealth? Or is it to use that power to try and shape a better world? The way we answer that question is going to define our global economy for years to come.